Hello, my name's Lee Knight. I'm a director in the Employer Solutions team at RSM. Today I'm going to talk about the new IR35 rules from the 6th of April 2020. Now, IR35 identifies individuals who work off payroll via their own intermediaries, such as a postal service company or a PSC, who are in fact disguised employees. What the rules do is that they state that if these individuals work like employees, they should pay broadly the same tax and NIC as employees. Now, under the current IR35 rules for the private sector, the onus is on the personal service company to assess whether IR35 applies and then to operate it if it does. But from the 6th of April 2017, the rules changed in the public sector, and the responsibility for assessing engagements with PSCs working in the public sector passed to the public sector end user. Now, where the individual working through the intermediary is working like an employee, the fee payer must then account for the tax and the NIC due under PAYE. This includes employer NIC and the apprenticeship levy, which means that there can be an extra cost for the fee payer. Now, the public sector IR35 rules are being extended to medium and large size end users in the private sector from the 6th of April 2020, but with further changes to the rules. However, organisations can still be affected by these new rules regardless of their size if they are not the end user but are the fee payer or are otherwise involved in the labour supply chain. Now, I mentioned that the rules for the private sector only apply to medium and large end users and fee payers. For small end users, there is a small companies exception. And broadly, a company is regarded as small if it has at least two of the features shown on this slide, being a turnover of £10.2 million or less, 5.1 million or less on its balance sheet, and 50 employees or less. However, these rules can be very complex, and slightly different rules apply to more complex situations, for example, where the company end user is part of a group, is a joint venture, or there are associated companies to consider. Furthermore, some companies are barred from being small, regardless of whether they meet these conditions, by the Companies Act. Now, this slide summarises the key obligations for medium and large private sector end users and public sector end users under IR35 from the 6th of April 2020. To summarise what's shown on the slide, such end users will need to identify impacted workers. They'll then need to potentially review their status. They'll then need to give that worker a status determination statement. And they will also need to give that status determination statement to any other party they contract with for their services, for example, an agency. The end user will also need to set up a status disagreement process. This is because the worker or any other party they engage with for their services can challenge the status that the end user provides in the status determination statement, and the end user has to respond to that properly within 45 days. Now, if the status determination statement states that the worker looks like an employee, then the fee payer then has to operate PAYE when the worker is paid. Now, the IR35 rules only apply where the worker is personally providing their services through their own intermediary, either directly to the end user or via another third party, such as an agency. The intermediary is normally a personal service company, but it might be a partnership or an LLP, for example. Now, different rules apply where an individual is engaged directly on a self-employed basis or is provided by a third party who engage that individual directly as an employee or on a self-employed basis. The IR35 rules don't apply in those sorts of circumstances. However, it is important that you look at and consider your obligations in respect of your entire off-payroll workforce, and don't just think about IR35, as you could have other employment tax obligations to consider. Now, if a worker is providing their services via an intermediary, for example a PSC, either directly or via another third party, the IR35 rules do not apply if the end user is being provided with a fully contracted out service and the contracted out services exception applies, or the conditions of liability are not met in respect of the worker's intermediary. Now we're going to have a look at both of those exceptions now. But first of all, let's have a look at the contracted out services exception. Now the off-payroll working rules require the worker to personally perform or be under an obligation to personally perform services. Where there is no personal service, the IR35 rules won't apply to the end user. Now, where wider services are contracted out to a third party in such a way that the third party does not, as part of that service, provide the recipient of those services with the labour of the workers, the off-payroll rules, IR35, should not apply. So let's have a look at an example of how this works. So in this example, X Outsourcing Limited has a contract with their client Y Limited to build and deliver a new computer system and provide support for 2 years. X Outsourcing Limited engaged 5 workers operating via personal service companies to help implement the project. Y Limited is not aware of how many workers are engaged, and the contract does not provide for X Outsourcing Limited to provide the personal services of the workers to Y Limited. Occasionally, the workers do spend time at Y Limited and are given security passes, etc., but they only report to X Outsourcing Limited and carry out tasks for them, not Y Limited. Now, in this example, this is likely to be a contracted out service, and Y Limited would not have obligations under the new rules. They would not be regarded as the end user of the worker's services for IR35 purposes, and they would not need, for example, to undertake the status determination statement. However, X Outsourcing Limited, provided it isn't a small company, may need to apply the rules as the end user of the worker's services, so they may need to undertake the status determination statement, give that to the worker, and ensure that the necessary dispute resolution process is in place. Contrasting that with example 2, in this example, same companies are involved, but Y Limited says it needs X Outsourcing Limited to provide 5 workers to advise it on how best to design the new computer system, and these workers will report to the Y Limited head of IT each day. Now, this is likely to be the provision of personal service and within the new rules. So in this example, Y Limited is regarded as the end user of these workers' services, and it needs to be compliant with the IR35 rules. For example, it will need to undertake the status determination statement and then give it to the worker and to X Outsourcing Limited. X Outsourcing Limited are the fee payer for these purposes, and if the status determination statement they are provided with from Y Limited says that the workers look like employees, X Outsourcing Limited will need to operate PAYE when it pays these workers. Now, the composite contracted out services question could be particularly important. It could affect whether IR35 applies, and if it does, who the end user actually is. Now, this is an area where HMRC need to provide updated and detailed guidance. It won't always be as clear as it is in these examples. Now, once an end user has identified that the worker is providing their services personally via their intermediary to them, and that the contracted out services exception doesn't apply, the next thing to think about is whether the conditions of liability are met in respect of the worker's intermediary. So very broadly speaking, the end user is checking that the worker is personally providing services via their own intermediary. And very broadly speaking, this is an intermediary which the worker controls. So this slide shows an examples of the conditions of liability for a company. So for example, a worker's personal service company. Now, the worker will be treated as controlling the company, and the conditions of liability will be satisfied if the individual worker, together with associates or family members, can either control or have the ability to control more than 5% of the ordinary share capital of the personal service company, or have or are entitled to acquire rights to receive more than 5% of any dividend income from the company, or possess or are entitled to acquire rights over more than 5% of the assets that would be available for distribution if the company is wound up, or receive or could receive payments or benefits directly or indirectly from the intermediary which are not employment income but could reasonably be taken to represent payment for the service of the individual provides to clients. Now, the worker is under a legal obligation to reply to a request for such information from the end user in 30 days. Now, once an end user has determined that the contracted out services exception doesn't apply and that the worker and their personal service company satisfy the conditions of liability, they'll need to consider the worker's status by applying the status tests, and they need to exercise reasonable care when applying these tests. Now, once status has been considered, the end user will need to provide their status determination statement to the worker and any other party that they engage with for their services, for example, an agency, as I previously mentioned. As also mentioned previously, they will also need to have a status disagreement process in place for dealing with disputes, because they will need to respond to such disputes within 45 days of receiving them to be compliant with the new rules. Now, special tests have been developed from case law over the years for considering and identifying status for tax purposes. Now, there's over 10 status tests presently, and some are more important than others. Now, it's not possible within this webinar to examine all of them, but as per this slide, the major indicators are control, financial risk, personal service or otherwise right of substitution, and mutuality of obligation. These are probably the indicators or the tests which carry the most risk. Sorry, not the most risk, that carry the most weight. So the end user is required to consider the contractual and working arrangements in light of these tests, and then make a decision based on the overall picture which emerges on a case-by-case basis. Now, this isn't a checkbox type exercise. It can be quite complicated, and end users must exercise reasonable care when carrying out these determinations. Now, HMRC have a check employment status for tax tool, otherwise known as test, as assessed, So end users can make a status determination, as previously mentioned, using CEST. And the output of CEST can be used as the status determination statement, which they are required, for example, to give to the worker. Now, many people have claimed that CEST is not fit for purpose. HMRC, on the other hand, claim that it gives a clear answer in 85% of cases, but the government is committed to enhancing and improving CEST and the associated HMRC guidance before the 6th of April 2020. So that hasn't been updated yet, but watch this space. Now, if you do not use CEST, your status determination statement should show the worker's status, how you reached that conclusion, and it must highlight the appropriate tests which have been considered and applied to reach that conclusion, such as right of substitution, control, financial risk, mutuality of the obligation, etc. Now, once an end user has got to the point where they've considered the contracted out services exception, which doesn't apply, they've confirmed that the worker and their intermediary meets the conditions of liability, and they've looked at the status tests and examined status, and the status determination statement states that the individual worker looks like an employee or is deemed to be an employee, then they'll need to operate PAYE on the deemed employment income which arises. Also, a fee payer involved in the labour supply chain might receive a status determination statement either directly from the end client or through the labour supply chain. If they get a status determination statement saying that the worker is deemed to be an employee, then they will also need to operate PAYE when the worker is paid. So when IR35 applies in this way, the fee payer has to operate PAYE on the deemed employment income which arises. This is otherwise known as the deemed direct payment. And this slide shows exactly how the deemed direct payment is calculated. Often, though, the deemed direct payment will normally just be the VAT exclusive amount of the worker's invoice. However, I would urge you to look at and consider all the steps shown on this slide. So let's have a look at an example of how this works. On the 1st of May 2020, an end user client engages a worker via the worker's personal service company, ABC Limited. This is on a 6-month contract, and the end user determines that IR35 does apply and that the worker looks like an employee. There are no materials costs, and under the contract, the end user agrees to pay ABC Limited £60,000 plus VAT over the course of the contract. Each month, ABC Limited invoices the end user £12,000, being £10,000 plus VAT of £2,000. Now, in this case, the end user is also the fee payer. So each month, the end user or fee payer must treat £10,000 as the deemed direct payment. They're required to use a BR code to deduct tax. So £2,000 of tax is deducted each month, along with £480 worth of employees' NIC. Now, this must be paid to HMRC via RTI or under PAYE, along with £1,250 of employers' NIC. So over the course of the contract, the end user / fee payer will pay £45,120 to ABC Limited, exclusive of VAT, £12,000 of VAT to ABC Limited, £12,000 of income tax to HMRC, £2,880 of employees' NIC to HMRC, and £7,500 of employers' NIC to HMRC. Now, we've underlined the £7,500 of employers' NIC as that is an additional cost to the end user and fee payer. Now, this example is provided just to illustrate how the rules could work. The NIC amounts are estimates which are based on estimated thresholds, not on actual thresholds for that year. Furthermore, it also assumes that the apprenticeship levy is not payable. But I think this example does demonstrate, broadly speaking, how the rules will apply. Now, there are some other practical PAYE points to consider when an engagement is inside IR35 in this way. Firstly, HR will need to capture the personal details required to operate PAYE. The payroll team will then need to create a payroll record, and they'll need to subject the fee to tax and NIC in the appropriate way, and apply the apprenticeship levy if the employer or the end user normally pays the apprenticeship levy, or the inclusion of these workers would cause them to. For NI purposes, they'll need to assign a table letter as if the PSC were a real employee, so the appropriate NI table letter based on their age, etc. would need to be applied. And for income tax purposes, if they're not given a P45, then the starter declaration C or something similar should be used, which would essentially allocate a basic rate tax code so that tax would be deducted at 20%. For payroll purposes, the payroll team would also need to set the new off-payroll worker marker in the full payment submission so that these workers are identified separately to normal employees of the business. There's some additional points to consider in terms of paying deemed employees. So when will they be paid? This requires some discussion and consideration, because what you wouldn't want to have is a deemed employee only run which occurs on a number of occasions during each tax month, because these sorts of workers are paid at different times. Now, while there is no legal right to a pay slip for these types of workers, these workers will no doubt want some form of documentation supporting the deductions, so it's likely that the end user or the business will need to provide something very similar to a pay slip to the contractor. Now, there's all sorts of practical points and issues to properly consider between now and the 6th of April 2020, which is clearly not far away. Now, these points are summarised on this slide, but I'm going to look at each of those in a little bit more detail. So firstly, businesses and organisations will need to understand the rules and how they apply to their organisation and the impact that they will have. They'll need to identify, for example, current supply chain engagements that are affected, look at current policies and processes, consider current costs versus future costs, and large businesses may need to consider any impact on their SAO obligations. Businesses and end users and other organisations should also consider what external help they might need to apply these rules and be compliant from the 6th of April 2020. Businesses and organisations will need to engage and be proactive. So, for example, who in your organisation is going to lead this? Who are the stakeholders? Do you need a project team to ensure that a process and action plan for ensuring compliance is put in place before the 6th of April 2020? How will the impact be explained to the wider business? And when will you communicate the issue to workers and any agencies that you use? And this is quite important. Businesses and organisations really need to start planning. For example, review future workplace needs and supply options. Devise work streams and a project plan for helping you be compliant. ensure that responsibilities on that project plan are allocated with dates and deliverables. Consider status assessment options, how you're actually going to undertake status assessments for these workers. Will you use CEST or some other process? Will you need external support? And consider, for example, the dispute resolution process. What sort of process do you need to implement, and is that going to be compliant with the new legislation? There are also operational aspects. So you'll need to review the status of your current pool of potential workers affected and consider any international implications. Now, the international implications and rules relating to this can be actually quite complex, and you may require additional support to consider this. Also consider drafting policies and procedures and evaluate onboarding workflows and linkage with other processes. And then finally, you need to implement your plan before the 6th of April 2020. So, for example, confirm policies and processes, go live on any new systems that are implemented. And you also need to have a continual review process. And don't forget that it's not just about reviewing workers that you are currently using. You'll need to do all of this in respect of workers that you continue to engage after the 6th of April 2020. Now, RSM can help with considering these rules in a number of ways, as shown on this slide. So, for example, we can deliver workshops and training. We can help you utilise technology solutions. We can help you consider the employment status of the workers. We can help you estimate cost increases. And we can help you undertake risk reviews. Now, we have an IR35 hub, which you can access through the link which is shown on this page. And I would urge you to look at the IR35 hub quite regularly, as that is being updated as these rules develop as we approach the 6th of April 2020. Now, this slide shows the team at RSM who can help you with IR35. Please do not hesitate to contact any of the individuals shown on this slide, or indeed your normal RSM contact. My details are shown on there too. Please don't hesitate to get in touch if you should have any questions about this webinar. Thank you.